Let's hope. Let's get straight to him. Steve Leisman has more on the BOE and the Fed. Steve, enlighten us.
Yeah, the third person was Catherine Mann, somebody we know. She was head of economics at Citigroup and was the former chief economist for the OECD. She's on the bank committee, and she wanted to go 75. She wanted to go 75 to break the inflationary psychology. So I'll break down the vote for you. It was 6-3. Two of them went, of the three dissenters, two wanted to go unchanged. One, Catherine Mann, wanted to go 75 basis points. Everybody, 7 of the 9, wanted to increase rates. Here's what we got. The Andrew Bailey, the governor of the Bank of England, saying inflation has peaked. They did a slight upgrade to GDP, but they are saying that the UK will be in recession, quote, for a prolonged period of time. And that future increases may be required. They do see inflation falling sharply in mid-2023, maybe even falling below target by 2024 at this rate. One other thing, the Swiss National Bank raising by 0.5 percentage point. Guys, I just want to get back to this idea we were talking about in the last half hour of the markets fighting the Fed or the Fed fighting the markets, whichever way you want to put it. Here's a chart that I think shows the situation pretty clearly. This is the Goldman Sachs Financial Conditions Index versus the Fed funds rate. What you see there is that if you go back, okay, there's that chart right there. That's not a chart, but it's the essence of it. The funds rate's up 2 percentage points since September 2021 in a series of hikes. There's the chart. Thank you very much. On the right-hand side, it's up 2 percentage points if you go to that September portion there. But the Goldman Sachs index is down from September. It's down 0.3. More recently, it's down by a full percentage point while the Fed is hiking. And you get to that question of who's got it right, which one has it right. There's the market idea that inflation is going to fall, that what the Fed has done, plus or minus, say, 50 basis points from here, will be sufficient to bring inflation down. That is not the attitude of Fed Chair Jay Powell, who is very concerned about what's happening in the labor market with wages rising the way they've been rising. But the one saving grace here, I think, is that Powell looks willing to slow things down and feel his way a little bit more carefully here. And it sounded to me like the next couple rate hikes are going to be quarter-point hikes. So the chance of making a big mistake here, I suppose, are lessened. And then there's the issue of him having to perhaps turn around. And this way, if inflation does turn around, he would be able to increase rates more and have the market with him if the data is with him.